Unfiltered opinions.
Introduce me.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
In our deep dive this week, we are taking a look at the real cost of education. Before we get into that, folks, if you are wondering why you're jumping straight into the deep dive, that's because our Market Matters streams are live streamed, so they'll be under the live section of our YouTube page. But when we put together the podcast, we'll still put everything together as one audio podcast for your listening pleasure, because we're like that. But yes, on to the real cost of education. And this came up for a number of reasons, right? So a couple of weeks ago in the community, we were talking about something, and then people were commenting on our posts in the community and everything. And it's happened more than once, but lately someone said that I was privately educated and that I must keep my private education out of certain matters. For those out there listening, I went to a public school. Wasn't privately educated. My parents couldn't afford to send me to Hilton. Very few parents can afford to send their children to Hilton College. And we're going to look at that. And I thought that would be a good thing to look at, is because as individuals, it doesn't really matter where in the journey you are. The moment you start having a family, this is a cost, whether you like it or not, that is sunk for a minimum of 18 years, sometimes 24, sometimes 27, depending on what your child then elects to study. But the reality is the cost of education, the full cost of education, is a lot.
Yeah, I mean, so some reference. I mean, so in the 70s, I didn't go to preschool or anything. I just got left at home, I think. Or maybe my mother. Actually, no, my mother didn't work. So my high school was 10 Rand a term.
10 Rand a term?
And if you couldn't afford it, you wrote a letter, you didn't pay. Okay, so I matriculated 87. So we're going way back in time.
Yeah.
I hated it. I don't know if it was a good or a bad school. It was Pinetown Boys, but it was 10 Rand a term. And of course, this was an apartheid school, so, it was subsidized by government. When I then went to tech, and I went to tech and not varsity, I think, because so my 2.5 years at tech, which included money for books, the entire student loan was like 4,200 Rand.
For how long?
2.5 years. And
you said you paid 10 Rand a term at high school?
Yeah.
The average at a public high school for 2023 in South Africa is 36,100 Rand a year.
Yeah.
That works out to an average of 3,000 Rand a month, right?
Yeah, per kid. And that's just
kid.
That's just your bog standard. There's nothing fancy. And then you've got all these things. So like when we had a rugby game that was somewhere else, I don't know, a bus arrived and took us. Like... But now my niece and nephew who are they got this and that, and then they're extramurals and raising money. And we did raise money in my matric year. Well, not me. Everyone else did. I boycotted. I didn't like school. It was fun. They didn't like me. I didn't like them. It was mutual. They were raising they were buying a high ace or something. I don't know. But it was cheap. And it's not anymore.
Yeah, but so fundraising is another conversation that we will come back to. I remember in my primary school, we were promised a swimming pool, I think.
All my schools had swimming pools. Dude, you go to white schools in the 80s, they all had swimming pools.
Okay,
fun fact, we had a shooting range with an armory with guns in it and bullets, because we used to play soldiers. What did they call it? Not scouts, something. We used to play soldier.
Yeah, thank goodness that's not an American school in today's day. Otherwise, this conversation would have ended very abruptly. But the cost of education, right? And the reason we're looking at this is because we've touched on the kind of high school education, but there's a lot of stages before that. Like you said, there's the preschool side of it, which for me, I'm astounded at people are saying that goes anywhere between 18 and 80,000 Rand a year. You pay more for a toddler in preschool than you do for a disgruntled teenager who's trying to navigate their way through life. But this is the thing, right? So you start at preschool, then there's primary school, then there's high school, then there's universities or technicons or anything of that sort. And on the public side of it, there's one aspect of it. But the moment you start having that schooling journey as a private and boarding kind of setup, can you guess how much the top school in South Africa charges per year for these things? So mind you, the average for public schools is 36,000 at a high school level. It's about 18 to 80,000 at, I suppose that would be at a preschool level, and around the primary school kind of level, around 24,500 to 25,000 rand is the annual average for those schools.
So top school, 250,000. It'll be Maritzburg or Hilton.
250,000, Maritzburg or Hilton. Incorrect. I will tell you the latest figures that we have, according to their fee booklets for the respective schools. Coming in at last place on this list is the cheapest of your options is Crawford College in Sandton at 190,000, being the cheapest of your options, right? And you've got a couple at 300,000, St. Stithians, Clifton, the likes of those. You've got St. Albans at 328. You move up to the 335 range with St. Mary's. And then you've got kind of your bishops at 340. St. John's College at about 350, with Rodine at around 360,000. Let's move up into, well, Rodine technically then occupies third place because we move up into second place, which is Michael House in KZN. Why are you KZN people so expensive? 368,000.
I went to Michael House. We would play rugby sometimes. Let's be clear. I didn't go for the education.
You didn't attend Michael House.
I
You were a
didn't attend.
visitor.
I went. I also went to UCT and Wits, and I go all over the place. How much?
368,000 rand
30,000 a month.
for 1 year. That is second place. Top spot, as you mentioned, Hilton College. Again, KZN.
Yeah, I know. I'm surprised Kersney isn't there as well, because Kersney is another one of these.
Kersney is on the list, but they're at
Okay.
350,000. So they don't make the top three. They're fourth. No, they're fifth. St. John's is 2,000 a bit higher than them, so they're fifth. They make top five, but they're
I mean,
there.
Kersney's a lovely school. I went there too to play rugby. In fact, I lived across the road from Kersney. So how much is the top one? How much is Hilton?
Without the rounding error, 397,660. With rounding, 400,000.
Yo.
Let that sink in for
Yo.
a moment.
I need to...
Now this is per annum, and if you think about, let's even say you're there for an average of 5 years, just your high schooling kind of time,
200K.
right? Yeah.
But you haven't got kit
No, that's
yet.
not 200K, it's 2
Sorry,
million.
2 million. But you haven't got kit yet.
Yes.
You haven't done any of their excursions. Because I imagine when these guys like excursion, right? Like we used to go to Wagon Drift Dam and sleep in tents. These days don't Wagon Drift Dam in tents, eh?
And there is the other aspect that I didn't mention. So with Michael House and with Hilton, boarding is included in the fee.
Yeah.
Right?
Yeah.
The others have an optional boarding fee. So in the case of St. John's at 352,612 odd per year, the boarding fee associated with that would be 145,844, pushing your total up to close to 400,000 rand, making it pretty much the same as Hilton, right? So you're looking at me like I'm making these numbers up.
No,
I'm just reading what I'm seeing. It's crazy. But here's the point, right?
I also know what teachers earn.
That's it. My mother's a teacher,
Ah.
right? But this is the thing. So as parents, you want the very best for your children. And for me, who doesn't yet have children, I look at these numbers and I think to myself, I want my children to have what I didn't have, right? You want them to be better set up in life, and you kind of see the aftermath or the end result of those sorts of things, right? So, for example, those kids that went to these private boarding schools with all of that, there's a certain community and culture and thing that comes with that you might not. I mean, I can think of all the people I went to school with. There are very few of them that I'm still in touch with.
There's none. So the most famous person to go to my school was Wackhead Simpson.
There we go. You see. So, but this is the thing. So aside from it, aside from the famous people that come out of the schools and all of that, it builds in the longer term, or at least what I've noticed, networks, right? Because the end result of it is when I then want to have my tech startup or want to build my business or want to do these sorts of things, I know my Hilton buddies that I went to school with might have access to other networks or might be in positions of influence at other companies.
I could imagine a Hilton Old Boys Club is basically like the who's who of CEOs of listed companies.
Yeah, but this is not to say that non-private school education is a problem here, right? We're looking at the cost of education and what you get for it. Now, is it worth it? Is it worth then saying, I'm going to invest 2 million rand into my child's high school education, not their varsity fees or anything else, their high school education, because I can afford it and I want them to have those relationships in future? Or is there something fatally flawed here that we need to be looking at?
Well, I mean, the first thing is we then perpetuate class structures,
yes.
Because fortunately, I went to a school where everyone was like there were no cool people. There was no cool at my school. So we perpetuate class. Fundamentally, we do, because these old boys clubs don't let you and I in. Like, I've never been invited to an old boys at St. Stidians or some fancy Michael House or Kersney or something. For good measure, I never went. I mean, so there's two sides to the equation. How good can an education be that it's worth 2 million? Let's put the old boys part aside, or old girls. How good can it be versus how poor is the government education?
But then there's a third element as well. And I want to bring that third element into it, is the employment side of it. Am I going to go and get that kind of education or that expensive education to come and sit here and be part of an unemployment statistic at a youth level of more than 60%? Or is it such that when I have a certain education, I'm less likely to be prone to unemployment? I mean, obviously that goes with different degrees of education. And as I say that, I mean, I'm looking at something that James shared with us. He was in the live stream. He shared this with us as well, saying that his courses at UNISA and for CYPA, and he gave us breakdowns of how much those costs. And that's the tertiary side of it you have to think about, is that's a factor, right? So whether you have an undergrad, whether you have a matric, whether you have a postgrad, whether you have a master's, whether you have a PhD, those are varying degrees of educational qualifications that obviously come with varying job opportunities. But in the job market, with what we see now, and you look at the social media lifestyle, you have things like influencer marketing or influencer brand building and that sort of thing that is not something you're going to learn in an educational institution, right? If you have a child that's starting school, what is their motivation to then go through this expensive schooling process versus, as you said, the average, more affordable public schooling process?
Yeah, and in a country where black youth under the age of, and I forget the number, but I was chatting with Yes recently of the unemployment data.
Will be under the age of 35.
Yeah, it's like 60%. So I think under 60, under 35, it is closer to 50, but and then under 24 or something, it's 60%. And so then you want to spend the money to make them not in that 2/3 of unemployed and flip them into the 1/3 of employed. Sure, but
But does it justify it?
Well,
Does
sure.
400K a year
No, I mean,
justify?
It absolutely does. I mean, and it goes back to the point. Like, if you don't get a job in the first couple of years after leaving tertiary or school, your options for employment just basically cater. Problem is do your parents have that money? It goes back to the class system, right? And let's be, it's worse at points, because in that same unemployment data, it comes out, if you are a white person in South Africa, your unemployment rate is like 8%. And the national average of 31.5. But that's because class, right? So the average person who's going to a black kid growing up in Kwandageze or Alexander or wherever is likely to struggle to get a job per school. So then you want to send them to the 2 million rand high school, but the family doesn't probably have the 2 million rand over 5 years.
Unless you happen to find a job in a parliamentary precinct of sorts that pays a comfortable. So this is, and that's the other aspect of it, right? Is the educational side of it, and we unfortunately don't have enough time to get into all of that. But as someone who then has the option or the privilege to send your kids to whether it's a public or a private school, that's a choice you then have to make, and it speaks to the quality of the system that we have in place, right? So again, not the quality of the teachers, not the quality of what's happening, but
100%.
You can't have things like a 35% pass rate, as an example, enforced at a matric level and expect the person that passes with the 35% to have the same mathematical aptitude as someone that would have gone for extra lessons, O levels, if you're doing it at a private institution or whatever it is, and gone for that rigorous kind of testing beyond that, right? So again, further perpetuating what you're saying around the class issue, but then perhaps on the class issue, the conversation we should be having is, should the government not be providing the quality of a Hilton at the price of a public school?
So fun fact, and the numbers are old and I don't remember them, but the sense is correct. So we spend about 5 times more per kid on education than Mozambique, yet Mozambique kids are like 100 places higher in the world ranking in terms of ability to read and write. So we are fundamentally doing our kids a disservice because we are spending money, we're just not getting the benefit of that money being spent. And that is squarely at the door of our government and education ministers. Mr. Nzabandi, we're looking at you.
That's another awkward conversation for another day. Unfortunately, we've run out of time on this particular deep dive. We can very clearly tell that this is going to be the first of many more deep dives down this rabbit hole. But for this one, I think what I'd like our community to do is share with us your experiences. Tell us how much, if you're a parent, you're paying for your child's education, how much it's costing you, what you considered when you went down this road. I mean, how you decided on the schools, how you make those decisions as a parent, but as a non-parent as well. Are you planning around it? Because there's a whole other aspect of it we haven't even touched on, and that's educational policies. Do I then take out an educational policy and say, I'm going to wait, if the child's going to turn 18 at a certain point or whatever, I'm going to have an educational policy that can afford to pay for them to go to this particular institution. That could be another story for another day, but that's the deep dive for this week. And we wrap things up this week with our investor insights. We are taking a look at import duties or tariffs or taxes, particularly where they relate to things that you might import off of platforms like Temu and Shein. We've been seeing a lot of this online lately where people have been saying they've been getting charged varying customs duties depending on what they're importing and not understanding how it's calculated, and varying calculations, whether it's on the weight of things or on the value of things. And there's There's a 700-page document. We're going to get into it in a second. Bear with us, right? So we're going to look at that, and we're also going to update our wall. We're going to add a couple of new picks, both local and international. We'll see if we move around a couple of things as well. I want to look at the likes of We Buy Cars that gave us numbers for the first time for a full year, and we're going to see if they are worthy of moving around on the wall. But let's start off with the import duties. It's always been a complicated thing.
Yeah.
Right? And this is where you want to have your ducks in a row, because if you're not paying the customs duties, it's not a negotiation. You just simply don't get your product. Your product gets withheld. Someone holds on to it. You don't get to see it. And whether you like it or not, for as long as you're buying from an international platform, whether it's a digital platform, e-commerce platform, or international supplier, you're going to be subject to these fees. Now, how do you then determine the import duties that you're subject to?
So I don't know. So when I buy from Amazon, if I'm buying from Amazon US, they tell me, and in fact pre-charge me import fees or the duties. And then if there's a difference, they will charge back or charge a little bit more, as the case may be. They typically overcharge a bit and they then refund. But I mean, I know, for example, clothing's 45%, and then there's VAT on top. Is there a handling fee that SARS charges? Is there a handling fee that the agent who's bringing it into the country charges as well? I don't know. But I can't help thinking that part of the Temu and Shein business models was this avoidance of fees. I mean, the other part is they sell and then they produce, so they don't have inventory, they don't have overstock and all of that. Well and good, but the other half, because America has the same issue. There, if parcels come in and I forget the price, I think it's however many $100, it just swoops in and there's no fees or anything like that. But in the changing world, the governments are saying, hang a sec, we want some of this cash. And of course, the Fashinis and Mr. Prices and Truers and all of those are complaining like heck as well.
So for those out there that might be wondering, at some point I used to shop on one of these platforms and then suddenly I'm paying more taxes or whatever. There were changes that were made, right? So previously, imports under 500 Rand were subject to a 20% customs duty, but were exempt from VAT. However, SARS has now changed that to a 45% duty and a 15% import VAT.
And the VAT's on the duty as well?
That's it. And now the VAT is calculated differently. So when you're calculating VAT on imported goods, you are looking at the added tax value to determine how much VAT you pay. So there's a complex calculation. It's on the SARS website. We'll put up the link in all our platforms and all our socials as well. So effectively what you do is to calculate the VAT on the imported goods, you first need to determine that added tax value. So you would take the customs value plus 10% of that customs value, plus any non-rebated duties that would be levied on the goods, times that by 15%, gives you the added tax value. That added tax value is then multiplied by the 15% VAT rate to give you the VAT applicable to that particular thing. So that's why you will see that people now have varying levels of things. Apart from that, there's also the fact that there are other levies that are imported. So when you're looking at duties on imported goods, it's the customs duties that you would be subject to. But sometimes, if you are dealing with a good that has been dumped into South Africa, there's anti-dumping and countervailing duties that you might be subject to as well. Then there's also the VAT, obviously. So the dumping goods as well, depending on what you're buying. So if you're buying...
Don't buy chicken or cement on Temu is what you're saying.
Don't buy chicken or cement on Temu. Yes, that's exactly what we're saying. So, but that's the thing. So depending on the product that you buy, so you'll see that your Temu or your Shein receipt looks different to someone else's, and that'll be based on the product that you buy and the VAT code, or how that VAT item, or not VAT item, sorry, how the import item is treated
because
there.
some things don't have, I mean, electronic goods.
Yes.
There's no import duty.
Right. But then also, the other aspect is the region that you're purchasing from. This doesn't seem like such a big thing, but SARS has that 700-page document we spoke about that outlines the various rates at which things are taxed at. So 25%, 30%, 40%, or whatever. But if you're purchasing something from a country like Zambia, right, that might not necessarily be on a platform like Temu or Shein, but that is an e-commerce transaction, and Zambia happens to be part of the Africa Free Continental Trade Area agreement, then you might be subject to lower taxes. So that's something else to take into account as well, is the tax relationship between where you're purchasing the goods from and South Africa as a country. So I don't know if all of the Temu or Shein products themselves are all sourced in China, because then that would be the relationship between China and South Africa. Or if I'm buying a Rolex via the Temu platform, we can debate the Rolex later. I know what you're thinking. Do not think that. That's not what I'm implying. All I'm saying is, if I happen to buy something that is from a third-party country via a platform like Temu or Shein, that tax regime might look different to buying something that is sourced from there because of the tax relationship South Africa might have with that other third country.
Short answer is when you're buying something on Temu or Shein and you think it's really, really cheap, it might not be. It also might not be. I was having lunch with Wayne McCurry last week and he bought magnets.
Okay.
A box of 40. He was going to use them to stick. He thought they were going to be this. Yeah, they were magnets. Like that big. They were like 3 mils across or 5 mils. He thought they were going to be 3 centimeters. It did say it in the small print. He hadn't read the small print.
Read the small print. Remember a platform called wish.com? Read the small print.
Yeah. And understand that, particularly with clothing, it's going to probably end up being double what you thought quite easily.
That's it. Yeah. That's it. And then you also have to debate whether or not it is worthwhile to pool your orders together, you and a couple of friends ordering together in bulk. Maybe that works out cheaper. Maybe you incur a lower cost. I don't know. You'll have to do the math on that. But we're going to leave it at that for now because we're going to get into our picks. We want to get into as many of the picks as possible. If we need to dip into this a little bit more, if we need to clarify some things, let us know. That's why the community pages are out there. Share with us your thoughts and your experiences as well. And we will come back to this and see if there's more to unpack here. But hopefully it does help. We're going to put up, as I said, the links to where we found the calculations on the SARS website, as well as the document that was shared by SARS with all of the various rates that are being charged. So don't say it's us that came up with these numbers. We found them from the South African Revenue Services and other places that officially publish this information. It's not our information. We just work here.
Yes.
That's it. We just work here. Stock picks.
Yeah.
Local MultiChoice. Their MultiChoice South Africa CEO resigned.
Yeah.
The MultiChoice Canal Plus deal is still up in the air. MultiChoice is still technically insolvent. We've discussed this as part of a separate conversation. Where do we put MultiChoice on the wall?
Sure. So it's at 108. It's got 125 Rand offer. They promised to do it by April. When you say it's up in the air, this is the ICASA foreign ownership of media assets.
That's one aspect of it, right? So we haven't even touched on that. There was a time where Canal Plus was just quietly buying up. They've increased their holding. They've made the mandatory offer. We're waiting to see where it goes, right? But at the same time, when you look at MultiChoice's performance, they're selling off 60% of their insurance business to Sanlam and hoping that the proceeds of that will then bring them back into technical solvency. Or at least that's the conversation I got when I spoke to the CFO. Now, the concern there is, okay, if you do that and it does go through, and you do, obviously the deal's going to go through, it looks like there's no problems on that side. But what is your plan as MultiChoice if Canal Plus does not get what they want? So if they can't acquire the stake or they start selling off the stake.
If they can't, the stock is going to... I mean, what was it
I'll tell you that because I was keeping an eye on it as well.
$65.
Yeah, so pre that, so we're going to lose quite a bit of value on that from 108 down to 65 if the deal doesn't go through. Now, we're not saying the deal's not going to go through.
And it's technically insolvent, so
yes.
65...
So for me, that's the concern. The concern is less around the deal with Canal Plus going through or not, but it seems like MultiChoice is pinning all of their hopes on that. They pinned all their hopes on Showmax 2.0. You look at the numbers now, it has been quite disappointing up to this point in terms of how much revenue it's generated and the packages and all of that. They're still losing subscribers on the premium side of it. There's a lot of issues with the MultiChoice business. And my question then becomes, where as an investor do I get the confidence to go into MultiChoice knowing that my upside is going to be capped at 125 because that's where the offer is going to come in at, and my downside, that doesn't even look attractive.
Yeah. Thanks, but no. Think I'm busy that day.
Think I'm busy that day. Right. So MultiChoice for us at the moment is not going to make it into the special place on our wall that we like, but where do we put it on the wall? Do we have an alternative for MultiChoice, or do we just plain avoid it?
Not locally, we don't.
We don't have one.
I mean,
locally.
offshore, you've got Netflix, you've got Disney to a
Yeah.
degree, and all the others.
Those are offshore picks.
No.
So locally, we don't have an alternative to MultiChoice. We're going to avoid it until further notice. We know exactly where we're putting it. Sorry, guys. It's tough. It's tough out there. WBHO, we were looking at Murray and Roberts in our Market Matters. We looked at their operations and that business. WBHO also in the construction space, also a difficult time for construction companies. We have been seeing a lot more positivity in the form of the conversations around infrastructure development and focus on infrastructure, turning South Africa into a construction site, blah, blah, blah. That bodes well for the likes of WBHO. How well, though?
And the stock has run. Hey, it is like that is a wild chart. But it's still not expensive. I mean, my consensus forecast says forward PE is 7.5.
Okay.
Which is cheap. Price to book is a little bit higher, but decentish amount dividend yield. They also ran into some problems in Australia, but they have resolved that at this point in time. I got to say, if you're looking for construction, a lot of folks will say Steph stocks, but that's an Eskom story. No less, no more.
Yeah.
It's either you buy the suppliers such as the Afrimats, you buy Robex, or you buy Wilson Bailey. Yeah. Avenge, I don't like either.
Okay, so if we're looking at this at 214 odd rand a share, is a lot higher than the 60 rand a share you could have gotten it at last year or even 2022.
22, yeah.
Right? So it has run. Are you waiting for a retracement? Because the other thing is, and I will reference this forever now because this is going to be our North Star of stocks that run like that. Sprouts, farmers market.
Yeah.
We spoke about it at $100 and we said the chart looked crazy from $40 up to $100. When I checked on it last week, it was at $140. Yeah. It just kept going up, right? Going. So is this going to be the case with a Wilson's Bailey's?
So Wilson's Bailey is not expensive. The chart does look like we're seeing a little bit of weakness. We've got some lower highs and lower lows. We might get down to around as low as 200. At that point, I think it's very much attractive. 214, sure. I mean, and it might slip a little bit lower from even there. It's down from the 240 highs of late October, or was it late October, early October, late September? I don't think it's expensive. I do think you might get it cheaper. And those is often famous last words. Ooh, this one's going lower.
Yeah.
Me and my sneaky bids, which are still there, waiting.
No, well, one day they'll be tricky. If we go into a recession, everything will be cheaper and everything will be easy to buy.
Like it.
Okay, so we like it. We'll add it to the wall. You said the forward PE 7 dividend yield?
Dividend yield is not particularly exciting. Dividend yield is 2 and a bit, forward PE 7.5.
We are definitely adding WBHO to the wall. While we're looking at the local stuff before we move off, we buy cars under neutral, and that was because we were waiting to see a maiden set of results. Those results came out. The share price has doubled since listing and everything. They have a lot of inventory that they're cycling through. They're managing the business. Do we like it enough to move it out of neutral?
Yeah. I think so. I mean, so what was headline earnings? Headline earnings per share, 91 cents. That's for the year. So it's not cheap, but forward earnings are much better. They've only got about 5% market share in an industry that is ripe for shaking up. We've discussed before that buying or selling a car on Elos Street was no fun. Now at least we can have a better experience.
Yeah.
And I know there's oaks out there on the Twitters and everything who are hating on them, but it is markedly a better experience.
Yeah.
And it's not the cheapest stock you're ever going to see, but it's not crazy expensive. And if you look at its forwards, it's on a PE of 18 to 20. It's not cheap, but it's not bad. The question is, do you want to go with one of the others like a CMH or a Motus? But Zeta, they're in a fundamentally different place. These guys are secondhand. The trend we're seeing worldwide is cars are expensive. So it used to be 1.15 secondhand cars per new car, and now it's 1.44. And that trend's not going to reverse in a hurry, I don't think. So I think it is about it. I don't think it's the cheapness it was at 20, and I didn't get it then either. It's actually now 42 and changed, almost 43. I think it's looking good.
You think it's looking good? I don't know. There's something about it that still concerns me. I mean, they've got a very big they've got a stronghold over the market, but we're not going to dig into this. This is not a We Buy Cars segment. We will come back to that. We'll decide what we do with it. Simon wants to move it. Let's move to the international picks. Starbucks.
Yeah, I have two problems with Starbucks.
I have one thing I absolutely love about Starbucks.
Which is?
Their business model on effectively being a bank without being a bank.
Oh, well, there's that too.
It's a phenomenal model.
Their coffee it's okay, but very expensive.
It is. It is.
And there are literally parts of the world where you stand at one Starbucks and you can see 2 or 3 other Starbucks because they don't want you to have to cross the street to get your coffee. Its PE is 30 odd, which for America is like not considered a lot, but America's drunk on coffee half the time. They've got the new CEO, which is an interesting thought.
Bounced off of $80 beautifully if you look at the chart.
Yeah. And they've had some challenges, but it's almost my sense. I was reading something a couple of weeks ago, which is when's the best time to buy a clothing retailer? When they miss. In other words, when they come out and say, sorry guys, we messed up the last season, sales are a disaster. Because if they're any good, I mean, Mr. Price, every 3, 4, 5 years, Mr. Price misses a season, just gets it wrong. They bought orange and everyone wanted pink. So that's when you want to buy. And maybe it's the same with Starbucks, that they've been kind of in the woods for a while, and maybe that then says, well, hang on a sense, there's some opportunity here. Yeah,
so the banking model that I like about Starbucks, effectively, if you think about how they have their rewards thing, you can top up your rewards profile or your account or whatever with cash, right? All that is you are pre-ordering coffee because you will always spend that money at a Starbucks. You will never spend it somewhere else. So that's why Starbucks at some point, I forget the stats, but at some point they had more in loyalty money than they did in sales. Right? And that was interesting because that's revenue you're going to get at some point or another, right? And that's the key difference between something like a Starbucks and a McDonald's, where to your point, Si, around having a Starbucks on every corner, having a McDonald's in every corner. A Starbucks in every corner, you don't have a advance payment on a McDonald's. And a McDonald's still gives you a choice to something else. You can't use your Starbucks points somewhere else. Right?
And the reason there's Starbucks in every corner, it's commodity, because you notice Yum Brands and KFC does not do that, because if you want KFC, you will drive.
Yes.
Speak from experience. Stock is just over $100, so it's obviously a lot nicer, sub 80. And then there's the concerns around China and the like. I like this new CEO. I heard some interviews with him at the time. Sure, I think it's looking good. Yeah, it's expensive, but that's because they need to get things right. They've lost their way in some senses, and they need to get that better again. I think they can probably do it.
They probably can. They probably have all the resources and things in place. So we're going to add Starbucks to our wall. The last one that's going on to our wall today is Carlsberg Group. They make alcoholic and soft drink beverages. They are Norwegian listed. Interestingly enough.
I did not know that. I just found the Malaysian one. They also have a listing for their Carlsberg Group.
Carlsberg Group.
There they are.
Listed
Norwegian.
on the Copenhagen Exchange. Sorry, not Norwegian. Danish. My apologies. Danish listed Copenhagen Stock Exchange.
Yeah, learn something new every day. Again, not massively. So the concern with these folks, and we see it with AB InBev, is the move away from traditional beer. And we're moving in many ways. But the youths are apparently drinking less.
Bud Lights and
And
Savannah
then they-
Zeros.
Yeah, and then they go and they drink weird stuff like gin. When I was a kid, the only person who drank gin was your granny. And so they're drinking gin, they're drinking those things, spritzers.
Yes.
And then when they're drinking beer, they don't want beer, they want nice beer. So Corona or your local beer made, with love and tears by some poor person around the corner. So they've got those headwinds. But then I don't know enough about the group to sort of like make it work. And they sell beer and other beverage products, China, UK, internationally, craft and specialty, alcohol-free, founded in 1847, headquartered in Copenhagen, Denmark.
Yes.
I just like them because they're Denmark and we could do a site visit.
That's it. I like Danish. We haven't looked at too many stocks in Europe. I think we've done a lot of stocks listed in the US because obviously that is main exchange and all of that. But when you look at the likes of
And the
Carlsberg,
price has come off a whole bunch.
It
Which I
really
always
has.
like that. It's forward PE 13.5.
price almost at 2020 lows. Look at that candle. Look at that chart. Come down quite nicely.
Yeah.
Very good entry point potentially here to be getting in around this range. I mean, you've got quite a bit of upside here to it. And if we're at pandemic levels almost, barring that spike down obviously in the pandemic, then you might very well be in a unique position here.
Yeah,
I think I like it.
And they're actually a little cheaper than AB InBev.
Okay. That makes it even better.
Okay, this is interesting. Yeah, for sure.
We like Carlsberg. There we go.
Makes sense.
We're going to
Yeah.
add it to the wall. It looks kind of nice. Remember, folks, these are our preferred picks. This is our wall of things that we like. If you like things of your own, go and like those things by yourself. Don't say we gave you financial advice. This is not a financial advisory show. If you want financial advice, speak to a financial advisor. You've seen our disclaimers. Don't come back to us, please. Thank you. If you have been missing out on the shows and being a bit confused, remember, we're doing the live streams Monday mornings for Market Matters. The rest of the segments are still recorded as per usual. We do put them out after the live stream, so we do still sit and record them all, and then we package it all together for you. We are coming dangerously close to the end of the year. We are excited. We're going to be the chill guys, because apparently that's what we can do.
Do we do our last show in our baggies?
Yes, we could, but there has been a suggestion as well that we do ugly Christmas sweaters. I don't know how you feel about that.
I don't have an ugly Christmas.
Neither do
sweater
I,
because
but we
live
can
in
find.
Africa,
We live in
where-
Africa. Maybe we can do ugly Christmas shirts.
Oh, I have those.
Well, there we go. See,
we go.
so we'll figure out what we're doing for the last episode. Remember, folks, that's going to be on or around the 9th of November. We're going to take a bit of a break going into the festive period. We'll be back in January, so don't stress. We'll give you enough to ponder on for the festive period and to think about. In the meantime, though, like, follow, subscribe. There's a button somewhere, top, bottom, screen. I don't know. I'm pointing up or down. Down. Okay, there we go.
know.
If you look in the bottom right of the YouTube page, I think there's a little icon. Our little logo's there. Click on that. That subscribes you. Until next time, investing isn't hard. Just try it.